Good morning, traders. Happy 2023. Welcome to the Elliott Wave Street weekly report. I'm Juan Maldonado, and we are completely back in the analysis and, of course, in the markets. Nothing better than starting the year with a complete analysis about the waves and what to expect and how to trade this upcoming cycle. So this is the euro. We're starting here on the 4-hour chart. We are looking for the price to complete the distribution process. The distribution happens at the top, and when we are talking about distribution process, is when the other participants are booking their profits, when some are starting to sell, and a lot of things are happening in this area. Imagine all the stops that could be at this zone. So clearly, this area is an area where a lot of participants are having their stops. So those participants are those who went short here, let's say, or here. I'm just drawing random levels, or here, whatever. They are having their stops somewhere above the high. So once the price hits the area and moves inside this area, we are going to have a big cleanup, and all these losses are going to the big guy pocket. That's one thing. The other important key thing here is that when we have this liquidity area, when we find out that this is a liquidity area, we also have pending orders. Some traders will go long at the breakout of this structure. But of course, that's a huge mistake. When you are trading, you find a way to buy when the market is near the lows. So you try to buy here, or here, or here. And I'm talking about the logic, not actual trades. And you try to sell here, let's say sell here, let's say sell here, right? So that's the logic. But never in your life you're going to trade the opposite way, buying at the market extremes. It doesn't have any sense. The same when the market is in a trend. You try to buy here, you try to buy here, you sell here, you sell here, you sell here, you buy here, right? That's the logic. Of course, then we have to check if there was an actual trade on those areas or not. Sometimes we don't have a setup. Some other times, like here, for example, we have an ideal setup, right? But the point is that that's the first logic in when you are trading. You buy at the lows, you sell at the highs. So currently, the euro is going to take out those stops, is moving up pretty fast. You don't want to short when you have that type of price action. And today, I want to develop this strategy, how to sell the euro this week. So let's start. This is the hourly chart. On the hourly chart, we are seeing a strong leg up. We can add an indicator, let's say the MACD. I really like the MACD. We can use any other indicator or just price action. So the thing is that look at the MACD is pretty strong during the leg up. So we are not going to sell this thing. But I'm looking for some sort of a stop in action formation. I call the stop in action when you are seeing the market going in a direction, in a directional move, pretty strong. You don't want to sell it. You don't want to try to fade that type of price action. So all we need to do on lower time frames is following the trend. But once we have this stop in action, that is going to be a pause, let's say this one, right? We have a strong sell-off and we have this stop in action. We're going to have different shapes during the stop in action. And then when we have this slowdown in the trend, the market is likely to make a hard high. But at that point, we have a distance between the two highs, a decent distance, a good distance, like these two lows. We have a good distance between the two lows. And that's where you can start fading the trend. when the price rejects, you can start fading the trend, right? So the same plan will be here. And look at the beautiful divergence on the MACD. If you'd like to use indicators, you can use it. If you don't like to use indicators, you can use just the price action. So no problem there at all. And the price makes these waiting for it to build this corrective. There are different type of corrective waves. Could be triangles, could be a zigzag, could be a flat, right? We need to wait for that. But once we have that stop in action formation and the price comes up here to the previous high, and we can compare the momentum between A and C, and that's where the sell trade is going to happen. When we have a beautiful candle showing up here, we can sell it. And that will be a beautiful sell-off. Confirmation, that will be the confirmation. This will be the entry. Here will be the stop loss. So that's the risk. And then at the one-to-one, we can book profits. I like to book profits once I reach one-to-one to reduce risk. And then the plan will be to take out this liquidity down here. And then we will see. If we have a strong sell-off, we can keep it, right? But of course, in the meantime, if the price, let's say, just keeps trending higher here, we can't do anything without this pattern. Remember, we need to have a good separation between the two highs to do something. If the price is going up and you see a divergence on the indicator or a bearish engulfing candles or anything that you believe is bearish, you need to ignore that part of the puzzle, because the price is likely to continue higher, and actually you will make more money on lower time frames by following the trend. But once we have the pattern, that's where we can trade it. The S&P. Oh, the S&P is so interesting, right? Let me show you the daily chart. So to keep it extremely simple, if the S&P moves down, that's the first thing we need to have here. Let's say that the S&P moves down here and is losing momentum, and we have price divergent, and we have the price rejecting. I want to start going long, ideally from this area. I believe is going to be a fantastic year for the S&P, and we could very easily reach the 5,000 area or something like that this year. Now, if we have the leg down and we have the rejection, I'm going long. If the price starts selling off, let's say aggressively, like it did here, it's gonna reach the previous low as it did here, right? So if we have a big sell-off, we are likely to have a lower low, and we can move our way forward to the right. Make sense? And there we can just go long. We can just find the way to go long after we have this rejection. This will be my dream trade, if the S&P moves down here. But I'm thinking that if it moves down, it's going to be just to this area. Now, as you can see, for both options, the main plan is having a leg down. So we will focus if in the future we are going to long here and close any shorts or lower. We have time. It's not going to happen yet, so we have time. But in the meantime, we can focus on finding the end of this B to short. That will be the shorter term analysis, the shorter term plan. Finding the end of this B to capture at least a leg down to the end of A, and we will see if it breaks down strongly, we keep part of the trade, or if it rejects, we close with good profits and we go long. Make sense? That will be the first months of the year. For now, we can move to lower time frames and find out what's going on with this B. The price is pretty strong to the upside after the employment report. So we are looking for the end of B. The easiest way is having this as a 3, 4, 5 rejection, and this will be the first attempt. Could take up to 3 attempts to join the leg down, especially when we are trading aggressively. The price is going up fast. Actually, will be better if we have some nice stopping action here. Let's say something like this, bigger, when the distance between the two highs is bigger in terms of time, we will have a better result, because this is going to be the effort of building the distribution. When it's tiny, let's say like this one here, on this area, the price is likely to continue. You don't want to try to go against the thing. But it would be fantastic if we are able to have something bigger here. But that will be the plan. I'm looking to find the end of B this week. For now, it's bullish. Of course, we need to follow the trend. Right now, we don't have any signal to confirm that we are going in the other way. Traders, this week, I'm doing a live webinar about Elliott wave. I'm going to share with you some Elliott wave basics and live market analysis. This special webinar is happening this week, January 11th at 6 p.m. EST. So you can register. It's completely free. Here on ElliottWaveStreet.com, we have the banner on top. You can click there and it will open up this form where you can register. And I'm going to leave the webinar link under the YouTube video as well. If you are seeing this video on YouTube, you will find it there. If not, on Elliott Wave Street, you will find the link to join the free webinar. And also, if you want to get the Elliott Wave Street professional analysis, live market analysis, we have in the membership tab all the different plans, as Forex, stocks, or full access, with the instruments that we cover on a daily basis. Here is everything what includes your membership, and you can sign up, you can subscribe here. We have this special, $19 the first month, so you can trial out, and then $75 per month. So it's a fantastic service. You will get immediate access to the charts, to the videos, and everything we have inside. So I'll see you in the membership. I'll see you in the webinar as well. Have a fantastic start of your year, and is the year to master your Elliott wave. Please have a fantastic rest of your week. Take care. Bye-bye.